Hey guys, Rafi here from the Endgame Investor. You can find me on Seeking Alpha under the pen name AustroLib. So we saw gold fall to about 1670 on August 9th and then suddenly recover. But gold stocks have not followed, so that seems kind of bearish. Also, there's a sort of a triple bottom in play or potential triple bottom in play, and triple bottoms very rarely ever hold.
1, 2, 3.
So the question is, with gold stocks not doing so well and triple bottoms very rarely holding, is this really a bullish setup? It could be. We could actually have a quite rare triple bottom in play, and those have happened in the past. In this video, I'm going to show you when they have happened and what happened to gold stocks around these times, around these triple bottoms. So this is the bearish action in gold stocks compared to gold since August 9th when we hit around 1670. And 1670 has been the triple bottom that's been in since March, and I'll show you that chart next. But for here we see in the candles, gold fell from around 1840, 4 days later to around 1670. It was a very big sell-off. And since then, it's recovered quite nicely to around 1820 now. And I think we're a little bit above this. This is the chart from August 30th, I believe. And the black line is the HUI index, the Gold Bugs Index, which is a gold stock index. And we see that since the bottom, gold stocks have not recovered pretty much at all. That doesn't look so good because usually gold stocks lead gold and not the other way around. So this looks kind of discouraging. Go to the next chart. See, here is the potential triple bottom in play. We have a bottom here in the first circle around 1670 also. And here around 1670. And also here, what we saw on August 9th. So these triple bottoms, very, very rare. Usually they are broken to the downside. And had that happened, then I would have been a big buyer. I was kind of hoping for it. But technical patterns don't always play out the way you want. You just have to know what the end game is and stick to it. Here we have the gold triple bottom that I was able to find. And these are not, these are not scientific observations or anything. This is more of an art than a science chartistry. I'm not a big chartist, but triple bottoms are rare enough that I think they should be mentioned. So here you have 2017. You have a little bottom here in March, a little bottom here in July at around 1200, and then another test of that bottom for it looks like almost 2 months, where gold kept zigging and zagging back and forth around the 1200. And you could say that this triple bottom was broken around August to, let's say, like 1170 or so. Maybe it was, maybe it wasn't. You can decide that for yourself and decide if this is a triple bottom or not. Let's just say it was. In any case, whatever it was, we see that in that case, this black line, which is again the HUI, this is gold stocks performance compared to gold in the candles. We see that gold stocks made a major, major low here. They were extremely bearish, very much underperforming gold as we went into September of 2018. But then what happened then in September of 2018 is we started to climb again, up to, again, around 1350. And then we had a little bit of a sell-off here, and then bam, we broke through a 6-year trading range that was locked in since the 2012-2013 bear market started. So in this triple bottom, what I'm saying is we see that gold stocks were major underperformers, but the triple bottom held, and then gold took off. Here's the one before that, 2005. 2005, 2006 was sort of like a sabbatical year in the middle of the 2001 to 2011 gold bull market. Gold took a rest in around 2005, didn't do much. But here we have what is more clearly a triple bottom around 412, 413. I don't remember the exact number. We have in February a bottom here with this little circle that I pointed out. Very nice artistry that I made on paint. Here you have June, July, same level. around 415, maybe it looks like. And then here in July, that triple bottom held once again. And after that third bottom, gold took off to around 725 by May of next year, of 2006. How were gold stocks performing during this time? Not so great. During that first bottom, the Huey was around here. It's not to scale. And during the second bottom, gold stocks were major underperformers again. Gold stocks bottomed here around May. And then during the third bottom, they were on the same level they were as back in February during the first bottom. So they kind of broke even. Not so great, but about on par with gold. Not underperforming, not outperforming. And this you'll see. And this you'll see is the exception. Because on all the other triple bottoms I found, gold stocks were major underperformers. And the last one might shock you. Next, we have what I want to show you is the inverse of a triple bottom, which is a triple top. Triple tops are very, very bearish. I'll show you two. One was in the early 90s. You had gold topping out at around 415, which is the same level as the previous triple bottom that I just showed you in 2005. Here, the triple bottom was around 415. Here, the triple top was around 415 in the mid-90s, about 10 years before that. So it makes sense that this triple bottom makes some kind of market symmetrical sense with the triple top that was hit in the mid-90s, which was very bearish, and then gold fell to around 250 in 2001, which marked the final bear market bottom. Here's the other triple top. Major triple top that you might remember if you've been involved in gold for more than 10 years, which I have. This was the triple top of 2011-2012. We had just seen the all-time high in gold at 1923 in September 2011 that year. Then we fell down to around 1523 and climbed back to around 1800, which is this first circle here. Then we climbed back to around 1800 after falling again in February of that same year, but we couldn't overtake it. And we established the final triple top in September, October of 2012, and from there, gold collapsed. That was a bad year. Triple top, very bearish. Now, here's the next triple bottom. The triple bottom before the triple bottom of 2005 was arguably the gold bear market bottom of 1999 to 2001. Now, again, this is a matter of a judgment call. Can you call it a triple bottom, a quadruple bottom? Whatever it is, let's call it a triple bottom. Maybe you call it a quadruple. Maybe that's even more bearish. I don't really know exactly how the technicians and the chartists call these things. But there are three circles here that I drew. One is in September, October 1999 at around 250. Second one in 2001, around 250. The third one around April 2001, around 250. And how were gold stocks performing during this triple bottom? Extremely, extremely poorly. The first bottom that we see here, September, October 1999, the black line of the Huey is at, I don't know, here. Okay. And then it completely collapses into November, into what it ended up being a final bottom. And then, yes, gold stocks outperformed for a little bit for a few months as gold was bottoming at 250, triple bottoming at 250. But it was still, gold stocks were still nowhere near where they were during this first bottom in September of 1999. They were very much underperformers. Next chart. Now this one is going to shock you, I think, because it shocked me. Not this one, but you'll see. Watch this. This is the next triple bottom that I found. This is 1979. Gold in 1979. I checked the price tables. It was around 375. And September, October 1979 is about 5 months before gold went completely parabolic and the dollar almost completely collapsed. You have a bottom here in September late September 1979. This is just when Paul Volcker took over the Fed and started getting medieval in the dollar on monetary policy. Another bottom here on October 8th, 375 around. And then finally, a triple bottom in gold on that famous date, October 29th, 1979, which was exactly 50 years from the stock market crash of 1929 that kicked off the Great Depression and all the monetary horror that we were still experiencing from the Roosevelt era. Now, here is the most shocking chart. It's the same 1979 chart. We can see here the triple bottom in the yellow line here, which is the gold. You see here a bottom around late September, where my little arrow is circling over here. And then another bottom at that same level around 375 right here. And then finally, around October 29th, it's covered here by that number there in gold, 373, but it's here. It's around here, the triple bottom that we just saw in the previous chart. Now, we do not have the Huey for this year, for 1979, because it didn't exist. But what did exist is the Barron's Gold Miners Index, which is an index of gold stocks that goes back to the 70s, goes back even before that. But we see here the we see here the performance from September of that year. And as gold was triple bottoming, at that point, when the triple bottom hit, gold was still up 17.39% from this point here, which looks like September 1st. At that same point, the gold miners index was down 3%. So here you had major underperformance by gold stocks about 5 months before gold went completely crazy. What I'm saying, guys, is I don't know if this is going to be a triple bottom. It looks that way at this point. If it is a triple bottom, then we cannot afford to wait for 1670 to break to enter positions. You need to be in gold and silver now. And in case that 1670 level does break, then you should have extra cash, but it might not. And if it doesn't, then a rare triple bottom will hold here. And as we've seen with triple bottoms in gold in the past, gold stocks don't tend to confirm these. And the fact that they are not now is not anathema to what is happening if the triple bottom holds. And if the triple bottom holds, the triple bottom of 1979 looks the most appropriate to what is happening now in terms of monetary policy and faith in the dollar. We could be at that era now, especially with inflation, with price inflation, the way it's been acting and getting worse. So exactly how this triple bottom is going to play out, if it plays out, I don't know. I just know that big things are happening and you have to be ready now. Cannot wait for a certain price level to break to get into this game, because this is the end game. We are in it.
1, 2, 3, 3.
And you don't want to miss it.